In this video, guys, let's look at the pros and cons of using profit targets. Stay tuned. Hey traders, warm welcome to you. All right, so pros and cons of using profit targets. As with everything in trading, there's always this yin and yang of doing anything. There's never a black and white with everything. Even with stops, it's not black and white particularly, but we tend to pick one or the other. But as most of the things, guys, I find that the sweet spot is somewhere in the middle. It's somewhere in the middle of going, okay, there's this, there's that, but somewhere between is the real answer for you. And that's when your personality comes into it. That's when your strategy style comes into it, all that kind of stuff. So what are my profit targets? So profit targets, I mean by, hey, I think the price is going to go to 100. That's my profit target. That's where I'm going to take profits. You've kind of looked at the market and you've assessed and you've thought that that's where the price is going to go. So that's what I mean when I talk about profit targets. So some of the pros of it is that you can frame your trade. I'm a big fan of doing this. I'm a big fan of saying, hey, where's the market? Where could the market go? Okay, my risk is this, my reward is this. The market could easily go there based on conditions it's in, based on previous moves. I'm not expecting too much out of it. And this is kind of a separate topic completely, guys. Some people have exceptional targets which are just unlikely to be hit in the time frame you want. Never say never, because the market could do absolutely anything, but sometimes people ask for too much from the market. But it helps frame the trade in terms of, is it worth taking this trade? Is it worth me taking the risk on this trade? Is it worth me even looking at this deal because the reward isn't there? It might hit this high and maybe it would do this and that, but really my profit target isn't good enough. So it helps frame and kind of reference, it gives you a reference point for how much you're going to make versus your risk on it. Helps you analyze where the trade could go. So what I mean by this is that actually, if you have a profit target, it means that you sit down and you do what I said just a moment ago, where you sit down and you go, okay, where could this go? This could break the upper of the channel. This could, if it breaks out, we could have a 4 or 5 day move, etc., etc. It helps you think 3 or 4 moves ahead, almost like a chess player, and going, right, where in theory could this go? And it rather than just taking having no profit target and go, I think it's going up, and you're buying it, and kind of then you get stopped out on the slightest little bit of move, or you get shaken out, should I say, on the slightest bit of adverse move. It helps you say, okay, right, great, I'm actually going to plan the trade. This is where I think it's going to go. It helps you frame it, the first thing, and it helps you analyze where the trade could go. And the third thing is it helps you stick to the trade. So in other words, if your profit target's this, a main challenge that many traders have is, we close our trades too early, we don't stick to the trade, don't do this. And like I said, if you're kind of going your direction and it's kind of wicking out, shaking you can get caught out and go, oh, I don't want to get that profit back. Whereas if you've got a definite target, a point where you're want to see the trade at, then it helps you just sit through it, because you can go, right, we're nowhere near it, I'm not going to monitor it, I've got my stop in place, fine. You're not watching every tick and worrying about, is this the place it's going to reverse, because you've decided on a profit target. So helps you with structure, helps you frame the trade, helps you analyze, more of a focused approach. Now, the downside of that is that you can struggle to adapt to a change in sentiment. And what I mean by this is, if the market's going your direction and it doesn't hit your profit target, but the whole dynamic of the trade changes. It changes to being a bearish condition, so say you're long, or it goes stagnant, or something just doesn't look quite right about it. If you're so fixed on your profit target, then you can end up in trouble, because you're like, well, it's got to hit my profit target or nothing. And this is challenging for you. You can struggle to adapt if you're so focused on that target. The challenge of having a profit target is you can leave a lot on the table. Super common on this, we kind of think, oh, we'll just grab the little profit there. But in reality, we're missing out on potential real big monster move. You could be saying, well, I think I'll just take 100 pips off the trade. You take 100 pips and the thing just rallies on another 800 pips over the next couple of weeks. You're going to be like, well, I did the hard work. I got into the trade, but I took out 100 pips because that's what I thought my profit target was. I guess it's similar to the adaptation of the market, but a positive, kind of a positive side. Hey, the market's become more volatile and my direction's become more aggressive on this. And so you go, right, well, actually I'll hold this because I happen to be in a good position. It's a runaway train. Great. Rather than just banking that profit, the first profit target's hit. Final one here is it can be frustrating for you if you just missed fills. We've all been here, profit targets here, price goes up, just doesn't get it and comes back. And this is one of the challenges with having a profit target, and being so fixed on it, is that price goes up to it, the dynamic of the trade has changed massively. The reward is now X based on your unrealized P&L, your risk is now 10x, and you kind of let it all come back again. So you've got to adjust and adapt, I think, is one of the key things for it. And it can be super frustrating if you're just out of sync, your profit target's just too far, all these kind of things that just make you not getting your fills. So I think the better approach is a hybrid approach. So you have a profit target, you frame your trade. I really like the fact that you can frame the trade. I like being able to do analysis. I don't being able to kind of stick with the trade and say, well, I want to have it at least here, but have certain checkpoints. So certain checkpoints in terms of price. So let's say you're looking to the price to go to 100. Let's kind of do the old classical whiteboard thing. Let's say we're looking for price to go here. So why not have a checkpoint halfway? And at that halfway point, I'm going to reassess the situation. I'm not going to touch anything until the price gets up and holds there. If it does, I'm going to reassess. How has it got there? Has it accelerated through? Is it congesting above it, flagging? Great. Has it kind of worked back from it? So you can make a bit of a decision, and you can be a bit more dynamic, and you can adapt to a change in sentiment if that's happened. You can go, well, actually, we've kind of double topped up here, so I might just trim half the position, or I might close the position. I don't like the position. The whole market dynamics changed. Fine. And there's also, from that perspective, in terms of price, a kind of checkpoint, but there's also in terms of time. So depending on what time frame you're trading, let's say you're trading on a daily time frame, your swing trading, you might go, all right, I'll look at it after 2 days and reassess it. And so, these checkpoints in terms of price and time give you the ability to reassess, but at the same time giving you the kind of pros of being able to stick with it and hold out. And also, you can leave a lot on the table. You can change that because you can go, right, well, that is my final target. But again, maybe just assess it at that level. Maybe you go, okay, well, this thing's ripping. I'm not going to take it off. So I think framing the trade and having targets is great. Having preliminary targets as well, or checkpoints, is great, where you reassess. Then you're using the power of your assessment of the market combined with the holding strength and the ability to hold and frame the trade and all the pros, and find that sweet spot. Not for everyone, but I think that's not a bad way of approaching it, especially if you're kind of not getting filled or you're getting frustrated with things. Try something new, mix it up a little bit. Anyway, guys, take care. See you next one. Bye-bye.